Hey, what's going on, guys? Chris Malik, and it is about 6:10 in the morning on Wednesday, December the 16th. And so today we are awaiting at 2 o'clock this afternoon the Fed's decision to um, make changes to the monetary policy that we've had for the last 8 years. That they're going to raise the lower bound on interest rates from 0 to from a quarter to a half of percentage point. So what does that really mean? Let me draw a quick little diagram here on my little whiteboard. For any of you that have taken economics in college, or know anything about economics, or taken any economics classes, you'll understand this as simple. Or the demand to go with the other way around. I apologize. You got the supply or the price, and it's going to come basically in inverse. So what does this mean? Well, so right now you've got $0 or 0% interest rate bonds, high price. The Fed is going to kick it up to a higher point, so the price on your bonds are going to come down. And why is that? Well, because in order to get this same amount of yield that you're going to be able to get now, you're going to have to sell this bond that's getting a lower yield for a lower price than the $1,000 bond increment. So that's the simplest way to look at it. And something, I guess, kind of to consider with that is, if you have good bonds that are giving you the yield that is necessary for your portfolio, so say 4-5% is adequate, and you're holding bonds that get 4 to 5%, there's no need to panic. Okay, your bond price is going to go down, and you're like, well, wait a minute, I've got less money in my account. Well, no, you're still going to get paid back that full amount when the bond expires. But in the meantime, you're still going to get your every 6 months or every year, whatever your bond pays out in interest, you're still going to get that interest payment. So there's really no need to panic on that. The other thing that I've kind of seen pop up big with this lately is everybody's panicking about what junk bonds are going to do. Okay, so same thing. If you got a junk bond that pays, that's in a stable company that's going to be able to continue to support its debt, you've got nothing to worry about. Now, some of those junk bond ETFs have been getting beaten up, and which makes sense because their price is going down. You're not getting a definitive, interest rate. It's not like it's got a set yield. Well, most of the bond funds do have a yield, but the price is going to change on those as all the price with all the bonds within their portfolio lower. It's going to lower the price on those bond funds. Again, if all you're worried about is the yield is still going to be there. You don't need to panic. So really, the open market committee meeting decision that comes out today, there's really no need to panic. The only thing that it's really going to impact is It's going to lower the prices on your bonds. It's going to raise the interest rate, which is going to make the dollar stronger. And that should be your biggest concern, is the dollar strengthening makes imports more expensive. So anything that we'd be getting from overseas is going to become more expensive here in the U.S. now. The other implication with that is just that as the dollar strengthens, we could potentially run into inflation down the road. But right now, with the way the way the global economy is working, that's why the Fed's been very sensitive to raising interest rates, is because this is no longer just the United States monetary policy. Whenever we make changes to our monetary policy, it affects the whole globe. With all the interconnected trade between the U.S. and China, the U.S. and Japan, the European Union, and everybody with each other. Any small change in one country, especially when it's one of the two biggest countries, U.S. and China, is going to have a major impact across the global markets. So I hope that helps explain some things. And if you have any questions, feel free to put it in the comments. You can send me an email. My email is on the YouTube here, and I will take comments, posts, anything on Facebook, Twitter, at @cmelik on Twitter. Facebook, you just find Chris Melik. So thanks, guys, and I look forward to getting back with you guys soon. Thanks.